It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P, NASDAQ, they are both lower. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading well off their opening lows, with the Dow currently up 320 points. S&Ps are a little changed, while NASDAQ is still down by 0.7%. The U.S. 10-year yield is at 4.79%. Gold is in the red, oil is in the green, but Bitcoin, that's lower by 2.2%. Among the main 11 S&P sectors, leaders were energy and materials. Tech was under pressure, and leaders to the upside in the Dow, UNH and Caterpillar, while NVIDIA fell 2.6% and led to the downside. Regarding earnings, Moderna plunged as much as 24% after cutting its sales outlook. And in deal news, Cleveland-Cliffs and Nucor is said to consider a joint U.S. steel bid, and J&J to acquire Intracellular for about $14.6 billion. Wrapping things up, KB Home and Service Titan report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. We've got about 18 minutes left in today's trading session. It's been an interesting one. We're definitely off our worst levels of the session. You heard Charlie and Bill Maloney just breaking it down. The Dow in the green, but the S&P, call it flat on the day, and the NASDAQ 100 down about 0.6%, but much better than what it was earlier in the session.
I mean, it's honestly one of those days where I was locked into my decliners early on.
I know that are you messed up?
We're getting close on one of them to the green, Carol.
All right, yeah.
Okay, so.
Yeah. Welcome to my world today.
Yeah, I know. Well, hey, you win some, you lose some. Let's see what John Mowry has to say. John's Chief Investment Officer at NFJ Investment Group, joining us this afternoon from Dallas. What do you make of a day where you see the bond market do what it's doing? We talked to Mike McKenzie a little earlier in our program, out with today's big take about the relentless rise in bond yields that we've seen at the start of the year. When does that start to hit that equity market?
Well, I think it already has. If you look at what is occurring below the surface, I mean, the Russell 2000 is already off 10% from its peak just back in December. So we're already witnessing a pretty material correction. In fact, if you look at the bank stocks, those have given back all of their pre-election gains that we saw just after November.
So what does that mean? What does that tell you? Does that just say, hey, wait a minute, folks, let's be real. Let's wait to see exactly what programs, what initiatives come out of not only the soon-to-be President Donald Trump for a second term, but also what gets through Congress?
That is exactly correct. There's no question that we are dealing with uncertainty around tariffs, around inflation, but I do think that there are pockets of opportunity that are emerging as investors look for ways to allocate capital. You know, if you think back about last year, we had significant gains in the S&P 500. The momentum factor had its best year since 2000, and I think as a consequence, it does create opportunities for investors to rebalance, and there are two key areas that I would think about. The one is regarding style. So I think, value-oriented companies look particularly interesting here. And then if you look down the cap scale, if you look at those stocks that are, in the small and mid-cap range, a lot of discounting has already occurred.
Okay, so let's talk about some of these picks that you sent to us. I got to be honest. These are not household names for me, Carol.
Yeah.
But maybe I'm just, exposing my ignorance a little bit.
No, I think it's safe to say that for a lot of people.
Rexford Industrial, REXR, one of the companies that's on your radar. What do you say?
Yeah, I love that I picked some names that maybe are a little less common. So,
Rexford, up by 2% today.
Yeah, and that's fascinating given that yields are up, because this name has been hit by yields. But to take a step back, the industrial REITs benefited tremendously during COVID because we had to move obviously indoors, and we had to do a touchless society for a while. and the industrial REITs got very expensive. They also had record low interest rates. Now you're in a position where, because of the rise in interest rates and because of the risk on mood the last 24 months, you've got significant valuation dislocations. This is the largest pure play industrial REIT in California. And I don't know about the audience, but I did a lot of my shopping online this year. I don't think that's changing. The industrial REITs are squarely positioned to benefit from e-commerce. And ironically, it's pretty difficult to get new locations that hook up to the logistical networks, either by train, rail, or airplane, that make these so vital to the American economy.
You know, it is it's an LA-based REIT operating industrial properties in Southern California markets. I am curious about the fires there and exposure. Anything that you're hearing on that front?
We have been looking into that so far. It's our understanding that we haven't had any material challenges for the company based on those fires. But it is something that we're monitoring closely.
Yeah, it was down about 3% on Friday, up about 2.5%. So I wonder if there's a little bit of a trade off of that. Give us another name that you like. FFIN is the ticker, First Financial Bank shares. We are certainly all in and focused on the big banks this week as they start to report earnings. This is one, though, that is, I guess, more of a regional play, and it's based in Texas.
That's correct. So the regional banks really had their clearing event back in March of 2023 with the challenges with Silicon Valley and First Republic. So that really created the trough in valuations that we hadn't seen since '08. And the banks are still working their way through that. Now you have a yield curve that is definitively steepening after being inverted for nearly 2 years, the longest inversion in history. And you have a situation where many of the banks recapitalize themselves. They have very strong credit profiles. And particularly a bank in Texas that's growing and has been a beneficiary of all the movement out of the East Coast and the West Coast. We think this is well positioned. And I would just add on to that while tariffs are a concern, dollar strength is a concern, the regional banks won't be negatively impacted by that. And you've had a valuation reset here recently with those gains being wiped out since the election of President Trump. So I think there's a real opportunity in regional banks. We're going to be watching earnings reports closely, but I like the setup as we head into earnings and as we head into the start of the year.
Okay, so we have banks, we got REITs. Let's talk a little cloud-based software. Viva Systems. It's a $34 billion market cap company based out there in Pleasanton, California. This is one you're bullish on. How come?
Yeah, no, so I'll make a comment about healthcare first. Healthcare, there's definitely a theme if you pick up between healthcare and REITs. Both those areas got very expensive during the pandemic, and you have to be choosy. You mentioned Moderna as we headed into the program. That's one that got very frothy, very expensive during the pandemic, is still working off that overvaluation. Viva Systems is interesting because this is a name that is trading at the lowest valuation in over a decade. It's got 25% margins and is growing at 20%. And part of what's been impacting this company negatively is it does have a fair amount of revenues from overseas, which has been hurt by the dollar. But to be very candid, what we look for in companies are companies that are growing their top and bottom lines and have a dislocation in valuation, but not a dislocation in fundamentals. And healthcare fits the bill. It was one of the sectors that was flat last year. And this is a name that, I would kind of think straddles between tech and healthcare. You've got significant recurring revenue, low valuations, and a group that has not participated. So I like reallocating capital from some of those names that did so well last year into some less loved areas of the market where you're getting significant valuation dislocations. And I think that that sets up nicely and is somewhat of a protection against what may occur in the bond market if rates continue to move higher.
All right, really fascinating. Your major risk here when you look at 2025, and just got about 30 seconds here.
I think that inflation ticking higher is definitely something we're going to be watching very closely. If that occurs, it's going to send yields higher. You already have parity between Fed funds and the 2-year bond yield. So that's going to put the Fed to a very challenging position. I hope that does not occur. And I think that the probability of that's actually lower given that you see the rents continuing to come in at a moderating pace.
All right, going to leave it on that note. So appreciate it. John, thank you so much. John Maury, he's Chief Investment Officer at NFJ Investment Group, joining us there from Dallas. Folks, we've just got about 10 minutes left in today's trading session, and we're I'm taking a look here at our best levels of the session or just off of them, but that still means down about 4 points on the S&P 500. Dow Jones Industrial Average up 0.7 of a percentage point. NASDAQ just down about 0.5%. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, yes, indeed, everybody. We've got just under 7 minutes to go. We're going to wrap up this trading day. It's an interesting week. Don't forget the big banks kicking off their earnings. That's going to be a big focal point for us. And just continuing to kind of watch the news come out and get for kind of tone and see what CEOs have to say. Banking, that was an important one in helping to kind of get a feel of the financial environment.
Yeah, and on banking, there's an article that you pointed me toward, Carol Masser, in the Wall Street Journal that's getting a lot of attention on the Bloomberg terminal today. And guess what? Not about bonuses.
No.
About another hotly, I guess, contested policy.
Well, I think,
which would be return to the office.
Listen, was it last week or so that we talked about, according to people familiar, it was expected that JP Morgan was basically going to come out with a policy and say, hey, everybody, get back to work.
And they did that on Friday.
And they did that on Friday. So indeed, they were saying, listen, folks, we want you back in the office 5 days a week. Well, the Wall Street Journal reporting that JP Morgan Chase shut down comments on an internal webpage announcing the bank's return to office policy after dozens of them criticized the move, and at least one suggested that affected employees should unionize, according to people familiar with the matter. Again, we're reading straight from the Wall Street Journal.
Look, Carol, as everybody knows who has written stories for a web-based publication, you never want to read the comments, okay? And now I think the executives over there are learning that they didn't even want the comments to be there because the folks not so happy about this. Concerns about childcare, concerns about increased commuting costs, work-life balance, Familiar things we've been hearing about over the last few years.
It's like, you put down the modern day version of the suggestion box and basically, okay, I've had enough of your suggestions or comments. We're moving on.
But those are anonymous. Are these anonymous? That's what I don't know.
I feel like anything in the digital world is not anonymous. Yeah. And so let's just put that out. But apparently they took in some, and my understanding is the posting about the back to work is still there, and some of those initial comments is also still there. But I guess they just shut down like, okay, we've kind of heard enough. We know how you feel.
A person close to JP Morgan said the bank often turns off comments on posts after they receive high volumes of comments.
All right, so maybe they just do this. Maybe it just gets to a point where like, all right, we got the message.
This idea
we got the memo. Or we gave you the memo and we got the memo response.
Yeah, engagement on a story. Hey, Jamie Dimon over at JP Morgan told the Wall Street Journal last year that he thought employees should be back in the office 5 days a week, but he said, quote, there are some jobs where taking a day or two at home is fine.
Yeah, so maybe some flexibility. The bank's executive said that when announcing the move that affected employees would receive a 30-day notice before they are expected to return to the office full-time. They also said there will be a limited number of teams that can work remotely or even on a hybrid basis if their, quote, work can be easily and clearly measured.
Just because an organization requires a person to be there each day, does it mean they're required to be there during the whole day? Does it mean they just kind of have to come in, they can stay for a few hours, they can go catch the kids' soccer game, and then
maybe
work a little later that night?
Wait, who are you talking about?
It's dependent on where you are. I mean,
yeah, exactly.
I'm also talking about Citi because
we've heard that distinction between Citi and some of the other big banks.
They're more on the flexibility, at least at this point.
Yeah. So I don't know. I think the expectation. I think we did think the way we work all changed during the pandemic, but I think increasingly, and you've got a firm like JP Morgan that just built these incredible new headquarters just down the road from us.
You don't build a building like that and then have people work remotely.
Work at home. It'll be fine.
Check that thing out. Park Avenue, right? Is that right?
It's just down the street from us. We've been kind of watching that building go up. So, yeah, I kind of get that while they should do it. I will say that JP Morgan said, we know that some of you prefer a hybrid schedule and respectively understand that not everyone will agree with this decision. This is again from the memo. We feel that now is the right time to solidify our full-time in-office approach. We think it is the best way to run the company.
Wait, if you don't agree with the decision, do you have to do it?
I guess if you want to keep your job.
Okay, there it is.
We continue to get kind of tweaks, if you will, around this work from home versus work in the office. So JP Morgan, they're pretty firm about it. All right, folks, we have just a couple of minutes to go until we wrap up this trading day. As we mentioned, we're well off our worst levels on the equity trade, but call it flat on the S&P and lower on those NASDAQ names, although we're seeing some buying. S&P now in green, so a little bit of a gain. The closing bell starts right now.
Closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Bonnie Quinn, taking you through the closing bell. A global simulcast starts right now. Carol Massar and Tim Stenovic joining us in the radio booth. Scarlett Fu and Alex Seal have the day off. We welcome our audiences across all of our Bloomberg platforms to parse the most crucial moments of the day. And Carol, what a turnaround from what this market was signaling just a few hours ago.
Yeah, just a few minutes ago, I was saying, the S&P and the NASDAQ 100 were still in the red, even though they were off their worst levels. But right now, we've got the S&P 500 actually up 11 points. So we're seeing, Romaine, some buying here into the close.
Look, I'm not going to, Alex isn't here, so one of you is going to talk about the bond market. That's certainly a big part of the story today, Vonnie. We'll see what happens later this week when we get CPI also. Could this be a peak on the 10-year yield, at least for this cycle?
Well, I'm not calling it, Tim. You can if you want, but there's no way I'm making that call. Tell you what, though, if you look at the map of the equity market today, particularly the S&P 500, Romaine was just mentioning it, we are looking at companies that we probably haven't had to say the name of in a long time. Materials companies like Corteva, for example, doing well, industrials doing well, energy doing well on the back of higher energy prices, oil and natural gas, it should be said. And, financials, we're about to head into financials earnings season. Real estate, too, interestingly.
And the question is whether or not that's a good sign. 6 of the 7 of the Mag 7 in the red on the day, yet you still have a market here now holding into the green with just about a few seconds left before the bells. We should point out the VIX, which had been elevated earlier in the day, trading above 22, now back down to that 19 level, and similar strength that you saw in the dollar, fading just a touch here. on this Monday afternoon. The closing bell's giving folks, a little bit to cheer about. The Dow Jones Industrial Average, that's your primary gainer on the day, up about 0.9% as we wait for these numbers to settle. A gain of more than 300 points, about 361 points. We should point out Dow Transport's also up about 0.9% as well. The S&P 500 looks like it's going to close higher by roughly 9 points, right around 58.36, up about 0.2%. The NASDAQ Composite and the NASDAQ 100, those are your two outliers. Both going to close in the red, down about 3 to 0.4%. And the Russell 2000, which earlier in the day was down about 11% from that intraday high that it hit back in November, clawing its way back into the green, a gain today of 5 points or 0.2%.
Wow, interesting to see this move around, and you wonder about what was that late market sentiment. I'm looking at the S&P 500 once again, and you have most names, Vonnie, in the index higher today, 377 to be exact, 123 to the downside, 3 unchanged.
Yeah, and if you look at the map, as I was saying, you know, all of those energy-related names, all of those deal-related names are higher, and that's pushing some of those sectors higher that you haven't seen higher in a while, like industrials, energy, healthcare, for example, financials. But you also have those lower information technology down 0.9%, utilities, and we all know why that is, down 1.2%. We were speaking with Pedro Pizarro earlier on a very, very difficult situation out in Los Angeles, and of course that is impacting the entirety of the utilities sector today.
Yeah, certainly keeping a watch on it. I'm looking at that IMAP, a lot of green out there. Let me get to some of the individual gainers, and one of them has to do with a deal that actually happened today. Intracellular, that stock up almost 34%. J&J agreeing to acquire Intracellular Therapies. It's a company focused on treatments for the central system or central nervous system disorders. The purchase price, $14.6 billion or $132 a share. So that's about a 39% premium above the closing price on Friday. Bloomberg, by the way, earlier reported a deal was in the works, so coming to fruition on this Monday. Also, we watched a lot of the healthcare pharma space, JP Morgan Healthcare Conference underway. But Humana was actually in the news, along with a lot of other healthcare plans, I should say, health insurers in particular. So Humana and others with Medicare Advantage plans. Humana alone up almost 7% in today's session. United Health was also climbing. This is after Medicare released a proposed plan that could allow an increase in 2026 payments for the companies. So that explains a big bump in that sector. And then, Vonnie, you mentioned the energy space. We saw energy bump up, newer restrictions when it comes to Russia, some sanctions that we got. And so there's some concerns about the supply. Russia, of course, one of the world's top producers. Well, Baker Hughes up about 3.6%. It's an oil field services and equipment company. It was one of the top gainers in the NASDAQ 100. Susquehanna raising the firm's price target on Baker Hughes to $53 a share. Stock closing just under $45 a share in today's session and keeping a positive rating on the share. So that was one of the other individual gainers in today's session. Tim, over to you.
Okay, those stocks in the green. How about some in the red today? Apple among those mega cap tech stocks driving the S&P 500 and NASDAQ lower today. Finishing the day down by a little over 1%. We got some news early today that Apple sold 5% fewer iPhones around the world. It lost ground to those Chinese rivals in the last quarter of 2024. This according to data from Counterpoint Research. Analysts say this was partly due to the lack of availability of Apple intelligence features in China. But one thing we also know is that those Chinese-made smartphones that are competing with Apple, with Samsung, like Xiaomi, for example, and also Vivo, are starting to eat into those companies' business. Apple down by a little over 1% today. Shares of Moderna absolutely sank today at one point to their lowest level going back to April of 2020. Yes, that was before the company even came out with its COVID vaccine that propelled it to a household name. The company cut its revenue guidance for the year. It missed the average analyst estimate. Right now, the company is struggling with slow demand for the COVID vaccine and slow demand for the RSV vaccine. Shares down today by close to 17%. And finally, watching shares of Sonos after we got the news early this morning that Patrick Spence, after 8 years as CEO, is out at the company. He's been there for about a dozen years. The stock initially jumped after that report, but then there was this pullback in the market. It fell as much as close to 11%. It clawed back from those losses this afternoon. Tom Conrad, you know him from Pandora. He was an executive at Snap. He's going to be interim CEO. I don't have to tell you if you are a Sonos customer. There have been lots of frustrations with the app update, and Patrick Spence out as a culmination of those issues. Romain, go ahead.
All right, I just want to get to some breaking news here. Another mover. This is an after hours. Angie. It's a small cap. Shares up about 9%. The company will be spun off. Remember, this is a company controlled by Barry Diller's IAC. The company has announced plans to formally spin off Angie. IAC is also saying that the CEO of IAC, Joey Levin, will depart after that spinoff. And they're saying in the press release that they do not plan to appoint a new CEO and that the CFO and COOs of those companies will report directly to Barry Diller, who is, of course, the chairman of the company. So effectively, they're saying that there won't be a CEO. We'll see how long that lasts. But, of course, probably more significant for Angie investors, a spinoff of that company, something that's been long talked about here, sort of piecing apart this empire that Barry Diller has built. Meanwhile, we do want to turn back to the yield space. We talked a lot about how the move in yields has been driving the move in the markets. And I want you to take a look at that 10-year yield, 4.78 and change right now, up about 3 basis points. And this is now the 7th straight day that we've seen a rise in 10-year yields. We haven't had a sell-off like this since at least May of 2023. You saw similar moves across the yield curve here. Your 5-year up about 3 basis points, your 30-year up about 2, your 2-year, that's the most rate sensitive, of course, only up about 1 basis point on the day.
Yeah, a lot of certainly, whether it's inflation, concerns about the deficit, right, and other pressures certainly weighing on the U.S. Treasury trade. Having said that, let's get to some of the stories that are on top of mind, or at least just caught our attention on this Monday. And this one, I think, is maybe for you, Romain. Ryanair coming out and demanding airport booze limits to deter unruly flyers.
So it's fired, literally.
2-drink minimum, or maximum, I should say. 2-drink, minimum.
Some might say you need a couple drinks to...
Oh, man, it's only Monday, everybody. 2-drink maximum at airports to reduce passenger disruptions and improve behavior on flights. Listen, they're talking about one incident back in April of 2024, Tim, that resulted in about $15,000 in extra expenses.
Isn't this more like? Isn't this more a question for Bonnie? I mean, she's from Ireland. This is Irish carrier. I'm not going to go there, but you know.
There is no one
Bonnie,
like
do you
the
want to go there?
Irish to know our limits. We know our limits. I think we can safely say that about the generalized Irish population of the globe. But the other thing, Carol,
I couldn't do that to you, Bonnie. I just couldn't do it to you.
Well, the thing is, Romain would never ever travel Ryanair. You know, it's a budget carrier, right?
Gosh, are you kidding me? Yeah.
Exactly.
He wouldn't be caught dead in a Ryanair.
No, I stick to the Gulfstream. You know that. Yeah, I mean, look, you got to do something to kind of keep passengers in check. And let's face it, this isn't just a problem at Ryanair. I think we've all seen this on other airlines as well. You know, I don't know. I don't know if a limit is the answer, but you got to try something. I guess.
You know, they start doing crazy things when they're drinking too much, like throwing their iPhones.
Yeah.
No, I'm just making that up. I was trying to give you a segue.
It is funny that you mentioned iPhones, Carol. I know you put that in there for me especially as well, because we were just chatting earlier about how, interesting it is that the numbers are dropping in China, particularly, and that's impacting the stock. Tim, you mentioned it earlier as, a faller. I mean, obviously, there are all sorts of other phones, and Chinese phones from Xiaomi and so on are extraordinarily popular in China, but this seems to be exacerbating and getting more exacerbated by the fact that Apple Intelligence, their AI offering, wasn't even available in China yet.
Yeah, I think that's certainly a big part of this, but also I think a bigger part of this has to do with the iPhone's competitors that are made in China that you can get for less money hold a really good candle to what you can get from Apple right now. And I'm wondering if, the days of Apple being the runaway leader in that country, if those days are numbered.
Yeah, it's a good question, right? We've always talked about how important the market is. We talked with our Mark Gurman, though, and he said, kind of get ready for 2025. There's some interesting stuff coming our way out of Apple. So we'll see whether or not that picks up some of the slack, maybe with maybe lower iPhone sales, at least globally and in China. All right, we got to run. That's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. Some news in the world of retail today, Carol. Macy's issuing a downbeat outlook for sales in the current quarter. It was a sign that executives might have been too optimistic about their expectations for the holiday shopping season. Abercrombie & Fitch announced better than expected sales for the holidays, but its share price tumbled. This after its sales growth target fell short of some analysts' expectations. They closed out the day lower by more than 15%, close to 16%. I do know that Travis Hess watches this stuff closely. He's CEO of Big Commerce. It's an e-commerce platform that works with businesses around the world to help them sell you their stuff. Companies such as Yeti Cycles, Johnny Walker, Uplift Desk are among Big Commerce's customers. It's publicly traded on the NASDAQ. It's a small cap, market value just shy of $500 million. Travis joins us here in the Bloomberg Interactive Brokers studio. Travis, good to see you. Doing some research on this, and you probably hate this comparison, but it's the world we know. I'm looking at the website. I'm understanding your business. Are you a competitor to Shopify?
Of course. Yeah, I certainly have come out of that ecosystem as well. I think our approach philosophically is different.
How so?
Composability is at the core of what we're doing, and if you want to draw an analogy, it's more open versus closed. I think our perspective on this is we believe more disruption and innovation will come by way of third-party ISVs and software providers, and as a result, our focus is really about the ingestion of those capabilities now and in the future, as opposed to building them innately into the platform themselves.
Would you say they are the biggest competitor out there?
It depends on the market. Certainly for traditional D2C and certainly digitally native vertical brands, unquestionably. I think if you look at other...
D2C meaning direct-to-consumer?
Direct-to-consumer, correct.
Go ahead, please, finish your point.
Yeah, I think if you look at different markets, different geographies, you're certainly going to have different types of competitors, but certainly they're the most outward and vocal about it, and certainly the one most obvious to understand.
So tell us, a company comes to you, a retail, and tell us what you do for them.
Yeah, I think for retailers, brand manufacturers or distributors, we are optimizing revenue for them while driving profitability independent of channel. I think the name of the game now is to go where customers want to interface with you as a brand, regardless of where they may buy your product or service. And I think the key challenge is organizational agility at the organizational level to be able to go experiment, drive value exchange through those different channels with speed, agility at scale.
So this means potentially building out an e-commerce platform, but also then helping them with what, back office, maybe at actual retail operations, and making it all work together.
100%. So whether it's an owned channel or a non-owned channel, that could be sitting brick and mortar with an owned brick and mortar retail. It could be non-owned marketplace. It could be a social channel or those that may come in the future.
I want to talk about cart abandonment because this is an issue for retailers.
I do it all the time.
Yeah, you put
all the time.
Well, what causes you to do it?
Because I'm just not quite sure I really want something, or I'm thinking about, do I really need this?
Sure.
And it's so easy when you're just going through like, yep, and then I'm just like, I'm done.
So
and then I get those annoying emails like, you left something in your cart. And I'm like, nope, I meant to.
You got to return the cart, Carol.
I know.
What causes me for cart abandonment is maybe more lazy than Carol.
Sure.
It's the payment part. And one thing that I love seeing when I'm checking out is Apple Pay right there.
Of course.
All I have to do is put my face in my phone and press the button twice. It's bought. I don't have to pull out my credit card, enter the info, put in my address.
Wait till your two little ones can do that.
No, they're never allowed
Makes
to
you
do
so
that.
nervous.
No, that's not going to be good. What's the checkout process? How do you make sure it's standardized so it's so easy to part with your money?
Well, to exactly your point, I mean, we take an agnostic approach to checkout. So as far as ingestion of payment providers, whether that's Apple Pay or PayPal or Stripe or whomever, obviously whatever fits the best use cases for a particular brand and size and business logic. But yes, it's to remove friction. It's to make that decision very quick, very easy, very seamless, so less steps along the process.
Do you have your own equivalent of Shop Pay? Like if I'm buying something, I don't even know if it's a Shopify-powered site, I put in my phone number, they send me a text message, boom, my information's already there. I don't need a password or anything. I got my stuff.
We do that today. PayPal just launched Fastlane, which is an alternative to that with a much deeper install base. So certainly if you're anonymous coming to a site and you begin to check out and you're not logged in, the fact that they have your account information will pre-populate that and again remove friction to make it more accelerated.
But you don't have a native one for your company.
Historically, we've not gone to market with native. We've certainly talked about it. We've considered it. That may be something we explore in the future. But the business model for us has not been, we are not a bank. We have not monetized and commercialized a business model based on a payment capacity. We've believed in very much, ingesting that agnostically.
It's so funny that you say that, Tim. That I agree that, it's just sometimes when it's Apple Pay, it's just so easy.
So easy.
But sometimes with Shop Pay and the information comes up and I'm like, oh yeah, somebody else has all my information, and sometimes that freaks me out. How do you continue to think about security of shoppers' information?
I think security is front and center, obviously, and I think the more personalized we get, it's kind of threading the needle.
Yeah.
You want to serve up a very relevant, personalized experience, but not so much where it feels intrusive, where people are hesitant to obviously share information, because the more information they share, the more relevant, immersive experience we can kind of deliver to them at scale. And so it is a fine balance for brands, obviously wanting to capture consumer information and leverage it in a way that would be, viable and meaningful and driving efficacy, but not so much so it feels intrusive.
You are a shopping platform, so you see, right? You see a lot of information, a lot of data goes through, you have access? Or no? Or I am curious about someone like you guys, that what it tells us about what's going on with consumers and the retail environment.
Yeah, we certainly can see consumer behavior as far as what's being added to cart.
I wasn't trying to get you to tell me what Tim last bought, but anyway, go ahead.
It's all good. Yes, of course, and there's many companies that have access to these sorts of things, and they want us to. Of course, we're going to see behavior of what's being added to cart, where people are browsing, how often they're browsing, and what they're clicking on, what they're abandoning, and how that's facilitating abandoned cart emails and things like that. And of course, we're leveraging those capabilities and serving it back to organizations, and they're also using their own algorithms and analytics and insights internally to get better at what it is that they're doing.
But what does it tell you about the consumers, since you do have that access? Just big, broad strokes here.
I think consumers most recently have become more promotionally oriented. I think a lot of people are abandoning carts because they're testing the waters on, could I get a better deal if I wait a little bit longer?
I look for coupons all the time.
Yep.
Wherever I am, but go ahead.
And you've seen this trend through the holiday traffic. I think brands that historically weren't promotional have gotten very promotional. I think you've seen a promotionally oriented economy in many capacities, certainly in traditional segments like fashion and health and beauty and things like that. I think most folks want some semblance of a recurring revenue model. So anything that's subscriptively oriented becomes a bit easier to predict and a bit stickier. And those that aren't, again, especially with fast fashion and other industries where they're constantly turning over, it's all about velocity of SKU volume. It does tend to be promotional, but it's also eroding margins. And again, it's a fine line, especially with potentially looming tariffs. What impact is that going to have on profitability if those tariffs negatively impact a supply chain and cost of goods?
Do you see the tariffs being implemented? Does that happen? Is that something that
I think it's been signaled. I think, love or hate the incoming administration. I think arguably you can judge past behavior that tariffs are a real thing. It's been certainly socialized, and depending on someone's supply chain and how oriented they are in producing things in areas that may be impacted by tariffs, it's certainly going to impact their business.
Your customers getting ready for it?
Yeah, I think everyone's getting ready for it, and I think you're seeing people hedge, certainly in industries that would be heavily impacted by manufacturing in China, maybe looking at alternatives in region, or maybe bringing things more domestic. Depends on the industry, depends on the margin, but certainly it's front and center.
Cool stuff.
Travis Hess, really cool stuff. Thanks so much for joining us. Congrats on the new job, too.
Thank you guys for having
3
me.
months in. CEO of Big Commerce joining us here in the Bloomberg Interactive Brokers studio.
Coming up next, we got an update from the JP Morgan Healthcare Conference with the co-founder and CEO of Oxford Nanopore Technologies.
4:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks staged a rebound. S&P and the Dow both higher today. NASDAQ in the red. On this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. S&P 500 index spent much of the day lower, ended with a 9-point gain at 5836, up by 0.2%. The Dow kicked off the new trading week with an advance of 0.9%, up 358 points. NASDAQ, though, finished lower. The NASDAQ Composite Index was down 0.4%. 10-year 4.79%, the 2-year 4.39%. Gold down 1% to $26.61 the ounce, while West Texas Intermediate crude was up 2.8%, $78.70 for a barrel of WTI. Johnson & Johnson has agreed to acquire Intracellular Therapies, a company focused on treatments for central nervous system disorders, for about $14.6 billion. Today we saw Intracellular surge 32%, J&J up by 2.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. Well, the 43rd annual JP Morgan Healthcare Conference in San Francisco is underway. It brings together healthcare executives and pharmaceutical industry leaders and tech innovators to discuss the latest in the sector. One of those companies is Oxford Nanopore Technologies. It's the $1.6 billion market cap company that has devices that sequence DNA and RNA to offer real-time analysis. We got with us right now Dr. Gordon Sanghera, the co-founder and CEO of Oxford Nanopore Technologies, joins us from the JP Morgan Health Conference. Shares surging today as much as 25%. It's the steepest gain going back to September of 2021. So you guys had some news out, a trading update that analysts certainly found reassuring. We're going to get to that in a minute, but let's take a big step back here, because I'm interested in, for the layperson, understanding exactly what your device does, what your technology does.
Sure. Afternoon, everybody, from sunny San Francisco. Warmer than London. So we have a genetic analyzer that is analogous to what happened in the computer industry. So today, the incumbents that do genomic analysis are like mainframe computer providers. They're large, complex machines, multi-million-dollar, in multi-million-dollar infrastructures. We are able to provide cheap, small devices, very similar to the change in computing from mainframe to desktop to handheld. Here's a sequencer I brought with me. This is our MinION.
So it's like the size of a smartphone for people who are listening.
It really is, yes. And that was critically important in distributed sequencing and understanding all the variants during the COVID epidemic.
How much is one of these devices?
A couple of $1,000, so very cheap, very affordable. That's orders of magnitude cheaper than an existing centralized machine, where you're batching everything to get economies of scale. These things are pay as you go. So it's really the step change in the way that we saw democratization and access of compute. It's the same for DNA, RNA information. And as we know from the last pandemic, distributed access to DNA, RNA information is going to be important to stamp that out quickly.
Dr. Sanghera, from our understanding, the presentation you did or are doing or planning to do at the JP Morgan Healthcare Conference, there's 4 core end markets for you guys. The biggest one is research. So by enabling researchers and R&D at, I guess, companies, at academic universities and so on, and institutions, I guess, tell us what that will be used for and what that enables these institutions and companies to do that they might not be able to do today so easily or so cheaply.
Absolutely. So if we do it in the context of human genomes, that's 3 billion letters on one continuous chain, 4 bases, GTAC. And for 20 years, people have taken that DNA, broken it down into 200 base pair chains, made a copy, so gone from full high definition color to black and white. And then you get some interesting insights in biology, but you're really losing a lot. We're able to read the native DNA as it's presented from, for example, a patient sample, which means we can look at that DNA in full high definition, in color, in a very simple device, in real time, with affordable, accessible equipment. So those researchers, whether it's a PhD student in academia or, you know, big biopharmas, they're able to illuminate what is often referred to as parts of the dark genome, which code for some of the most difficult disorders that we cannot get at today: mental health, neurodegeneration, early onset cancer, Alzheimer's, things like this. And they're now beginning, and they're at the foothills of that journey, to understanding the biology that underpins these diseases that we've not really moved the needle on for 50 years.
So is this to help not only in treatment of individuals, but also to create better modalities for treatment?
Absolutely. Both accelerating biomarker discovery by moving to, so people, we all talk about the genome. So 20 years ago, the genome was published, and that's really just looking at single point mutations. There is now a movement to multi-omic genomes. What does that mean? Well, we have 4 bases, GTAC. There is actually a 5th base, which is chemical corruption of your C base, and that chemical change is methylation. And methylation is the smoking gun in all cancers. And that's been known for 20 years, but this technology really allows you to get comprehensive maps of methylation, which are then having a huge impact immediately. So for example, acute myeloid leukemia needs treatment immediately. Diagnosis today takes 3 to 4 days, maybe a week. By looking at methylation in those patient samples, so there's chemical corruption, they can determine the type of leukemia, AML, in 4 to 6 hours. And that is game-changing in terms of treatment. So rapid insights in acute and critical care is something that this technology allows, because it's distributed, point of care, it's real time, and it's giving you content that you do not get with existing tech.
Help us understand who has the devices versus who doesn't have these devices, i.e., what is the market opportunity that you have left at this point? Because if it is indeed something that offers a service at such a lower cost, then is everybody who wanted one, do they have one yet?
Not yet. It's a great question, and it's about the evolution of a disruptive new technology. We are in the foothills of that journey. So who has them today? These are the sort of forward-thinking academics, clinicians, biopharma companies, particularly, you know, the newer wave of synthetic biology, gene editing, cell and gene therapy companies. All of these people are creating momentum around the use cases, and the sort of 2 to 3 year outlook, you will see that then moving towards routine clinical practice. And that's why, in what is an incredibly tough market with all our peer groups either posting no growth or negative growth, we have continued to hit our year-on-year growth, 23%, and half two to half two, 34%, because there is that unmet need is being met, and at breakneck speed on a weekly basis, we see game-changing opportunities. The next phase of turning that into routine clinical workflows is something that will be big for us in 25. And then 26, 27, you will start to see that market penetration to much broader routine use.
So Dr. Sinclair, so I don't know, fast forward then, is it 5 years from now, 7 years from now? How might this product that you guys have developed, how might it change our world? And I also think about, from our audience, the Bloomberg audience, from, you know, financial perspective and investing perspective, you know, what opportunities that potentially could open up as well, or your device could open up as well?
Absolutely. So in the last 3 or 4 years, 5 years, early detection of cancer has become a thing. Liquid biopsy, so where you're looking at short fragments of cancer cells before there's a tumor. And if you can pick that cancer up early, there's a real opportunity that your treatment outcomes can be much, incredibly improved. So I envisage a world 3, 4, 5 years out where if you've had cancer, you're in remission. Instead of going for a 6-monthly checkup, you'll do a monthly blood test. And if you see that cancer reoccur, you pick it up immediately and it gets treated. But ultimately, if you come from a high-risk grouping, because your whole genome's been sequenced, and we know that, you'll then be routinely surveyed, and distributed healthcare will become a big thing. But let me take that a step further. I'm Punjabi heritage, so I have a high propensity to cardiovascular disease. And I probably should be on statins. But it turns out that if you were to eat tomato that are rich in something called beta-lycopene, you can get the same benefit of a drug, statin.
Wow.
And so I envisage a world where through gene editing, I have a custom diet that would allow me to not have to take a drug, but a nutraceutical, in this case, a tomato that's been crossbred to have high lycopene, which would have the same benefit of the statin, but it's natural. So I think there's just going to be, I'm just kind of picturing 2 bookends of where and how ubiquitous the ability to be able to do things with genetics and do it at a personalized level will really impact us.
Hey, before we let you go, we only have about 45 seconds left, but we have a viewer listener getting in touch and curious about what you think about GLP-1s, given that over the last couple of years, this is probably the medical technology that we've talked about the most.
It's an interesting one. I'm looking forward to seeing large cohorts of patients on GLP-1 being sequenced, so we can really get that multi-omic view and look at the cause and effect and better understand the mode of action, which will be beneficial for everybody.
So you see learning. We need to learn a lot more about them.
I think so. I mean, it's a great start, but there are already people talking about side effects and, you know, not being as impactful as it needs to be. And understanding the biology, the source code of an individual who's taken these medicines is where the future lies. That individualized, personalized approach will be game-changing.
Well,
and I think we make GLPs more efficient.
Interesting. Fascinating conversation. I hope we can get you back real soon. Dr. Gordon Sanghera, he's co-founder and chief executive officer of Oxford Nanopore Technologies, as we said, in the London trade, soaring about 25%. You're listening to Bloomberg Business Week. Coming up next, an update from the LA fires, including the impact on Hollywood.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be an up day for the S&P 500 index. Spent most of the session in the red, but almost 380 companies in the S&P 500 rose, with the gauge wiping out a decline that did approach 1%. S&P today up by 0.2%, higher by 9, back at 5836. The Dow up 358, up 0.9%. NASDAQ, though, lower, down 73 points today, a drop of 0.4%. 10-year at 4.79%, with a 2-year 4.39%. Spot gold down $26 the ounce, down 1%, $26.62 the ounce, while West Texas Intermediate crude was up 2.8%, $78.70 for a barrel of WTI. Bitcoin just about flat right now, 94,233 on Bitcoin. So we did see a mixed market today, with the Dow, the S&P both higher, NASDAQ in the red. John Mowry, CIO at NFJ Investment Group, says parts of the market are already in a correction.
If you look at what is occurring below the surface, I mean, the Russell 2000 is already off 10% from its peak just back in December. So we're already witnessing a pretty material correction. In fact, if you look at the bank stocks, those have given back all of their pre-election gains that we saw just after November.
John Mowry of NFJ Investment Group, interviewed right here on Bloomberg Business Week. Cleveland Cliffs is partnering with Nucor to weigh a potential joint bid for United States Steel. Cliffs' top boss has confirmed his interest in the American steelmaker. Today we did see shares of U.S. Steel up by 6.1%, Nucor up by 4%, Cleveland Cliffs up by 6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, as we've been talking about throughout the day, L.A. and the rest of Southern California face a second week of fierce winds that are turning wildfires into blowtorches, putting lives at risk and destroying homes, businesses, and cultural landmarks. It's a story about loss of life, loss of homes, and so much more, including an untold economic toll on the area. That includes Hollywood, which is once again in crisis. Lucas Shaw is managing editor, media and entertainment at Bloomberg News. He's the author of the Screen Time newsletter, which everybody should subscribe to. He also puts on the Screen Time event in Hollywood each fall, which we are lucky enough to attend, and all of you should go to. He does join us from Los Angeles this afternoon. Lucas, first of all, your Screen Time newsletter this week was quite a bit different, quite a bit more personal than it usually is. You write about your time in Los Angeles. I mean, you live there, you grew up there. You talk about accepting the heightened risk of natural disaster to reside in paradise. Give us your take on what's happening, and give us your take on how you're doing.
Oh, well, thank you for having me. I'm okay. My house was within sort of the outer perimeter of an evacuation zone. I got a notification from the city last week, and I did leave for a few days just as a cautionary measure. But I'm back home. Seems like it's fine. Obviously, we're all waiting to see what happens with the winds this week. The two big fires, one of them, the one closest to me, they seem to have a much better handle on. The one on the west side is tougher, still less than 15% contained. It's been pretty surreal, right? I mean, we all know that there's risk in Los Angeles. I think most people who live in the city assume that the earthquake is the greater risk. Fires always feel like something that's sort of on the periphery or in the more verdant areas of California. But look, both of the places that are the sites of the biggest fires I've hiked in the last month. That's just one of the great things about Los Angeles is you have these beautiful parks around you. One of the downsides to that is, they're very vulnerable to fire. And I think we all know people who've lost everything.
Yeah, I mean, there's no way to even just, when we talk about this story, the human loss, the impact of people losing their homes, multiple generations, it's just, and we're still trying to figure out the total cost because the fires aren't completely out. I have to say, though, we also think about what that area is so well known for. I mean, the Pacific Palisades, we talked about a lot of celebrity homes. It's a reminder that actors and everybody in the entertainment community, there's so many people who live out there, Hollywood. And I am curious, Lucas, what we're thinking or hearing might be the impact on that industry.
Yeah, it's a little, I felt like I had to write about it
Yeah.
while also acknowledging it's a little premature to know. There's the immediate short-term impact of there were productions that were paused, I think largely just to give everyone a beat to figure out what the hell was going on, because those were primarily shot on the kind of big studio lots. Most of those are not in harm's way, but they obviously have people who work on those shows who are. We're starting to see some of them get back up this week. I suspect most of them will be back in production within the next week or two. Sort of also near term, there's the big questions around award season in Hollywood, which we're in the middle of. So the Grammys have said that they're going to go forward, but a lot of the events around them, like Universal Music Group, the biggest music company, said it's canceling its events. I think people expect the Oscars to happen, but most of these big events will be focused, well, they will give out awards, but they will also be tailored to raising money for those affected by the tragedy. The exact particulars of that sort of we'll see in the next little bit. And then there's just sort of the big picture. I already know a lot of people who work in media and entertainment who have been leaving Los Angeles because there's been a pullback in spending, and so there are not as many jobs, because the city continues to get more expensive, because they're worried about crime. There are all sorts of reasons. And I think this will only accelerate that, because you'll see while I still prefer to live here and have recognized that there's some danger, there's some people who just say it's not worth it. It's too expensive. There's too much risk. If this happens with the Palisades this year, what's going to stop it from happening with Los Feliz and Griffith Park in 2 years?
Lucas, where are these people going, and where does the production go? I mean, for years, they've been doing production in places like New Mexico and parts of Canada as well, New York, obviously. But where do people move when they leave LA who are in the business?
Well, some people are leaving the business, right? So I did a piece late last year that started with, a lot of there are hundreds, if not thousands, of people who've just decided that it's not feasible to work in media and entertainment anymore. They're seeing, there's just been, between the pandemic a few years ago, the pullback in spending as a result of just sort of economic factors in the business, then the strikes, it just felt like there were going to be layoffs and layoffs and layoffs and people who didn't see opportunity. Now, the folks who still want to work in it, it sort of depends what they do. If you work in physical production, there are opportunities in a lot of other places, right? There's a lot of production that happens in New York, in Georgia. We did a study in December. Kentucky and Nevada are two of the fastest growing markets for production in the U.S. And then there's everything that happens outside of it. The U.K. continues to be a booming market, Eastern Europe, parts of Canada. That's less feasible if you are sort of working for one of these big companies because they want you in the office, right? If you work for Disney, if you work for Netflix, if you work for Warner Brothers, you can go if you're on set, but not if you need to report for, your SVP job.
Well, and as you said, as we kicked off, and just got about a minute left here, Lucas, it's hard to assess, the full impact or final impact as we are, the fires are still not out at this point. But I do think about, we have seen slowly or increasingly people in productions filming not in the LA area or in Hollywood. Does that continue? Do you expect it to continue? What's the future? I know that there are initiatives to lure more productions back to the LA area. I mean, what do we know is the longer term view here? We've got about a minute left.
Yeah, I think most people would expect there to be a continued exodus of production to other states and other countries. The only way that doesn't happen probably is if the state steps in, and the state has already offered pretty significant incentives, and there are some who would like them to do even more.
I always think about the studio tours you do and the big film stages and stuff, but it increasingly sounds like less and less, and it's not such necessarily a priority. So appreciate getting some time with you. Thank you so much. Stay safe, and we hope all of those around you are staying safe as well. Lucas Shaw, he's entertainment reporter at Bloomberg News, joining us from Los Angeles.
Hey, I got some news crossing the Bloomberg terminal. The Trump team is studying a gradual tariff hikes under emergency powers. Jenny Leonard and Saleha Mosen writing that members of President-elect Donald Trump's incoming economic team are discussing slowly ramping up tariffs month by month. It's a gradual approach aimed at boosting negotiating leverage while helping avoid a spike in inflation. That's according to people familiar with the matter.
So one idea involving a schedule of graduated tariffs increasing by about 2 to 5% a month. So this is according to sources. But again, we're getting more color about how this plays out. What?
T-minus 1 week inauguration. You and I will be here covering it.
And we've heard, right, we are. We're going to be doing full day coverage here. You're listening and watching Bloomberg Business Week.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're getting ready to wrap up the Monday edition of Bloomberg Business Week. Carol Masser, Tim Stenovec live in our Interactive Brokers studio. And Tim, you read that tease. Greenland ready to cooperate with Trump. This is coming from the Prime Minister of Greenland. And I was like, wait, what? But it is our most read story on the Bloomberg at this hour.
Yeah, the Prime Minister saying he will seek a closer relationship with the U.S., highlighting the Arctic islands' push for independence amid renewed interest from Donald Trump. Here is what he said, quote, "We have started a dialogue and seek opportunities for cooperation with Trump." This is from a press briefing in Nuuk on Monday, according to the local broadcaster KNR.
This is kind of fascinating. We have the doors open in relation to mining, he said. This will also be the case in the coming years. We have to trade with the United States. His comments come after, as you know, President-elect Donald Trump saying last week, reiterating his ambition to take control of the island, a self-ruling territory of Denmark with 57,000 people. So both the Prime Minister of Greenland and Denmark's Prime Minister have on several occasions stressed that Greenland is not for sale and that it's up to the Greenlandic people to decide the future of the island.
Maybe they should come visit before they decide if they want to be part of the U.S.
Oh, wow.
You know, do like a little exchange program.
Ooh, coming in hot there, Stenovec.
Why?
I don't know. Oh, yeah, I don't know.
If it's up for them to decide, I mean, they got...
Whether they want to become an American?
I don't know. However, House Republicans have introduced a bill that would allow Trump to start negotiations with Denmark to, quote, secure the acquisition of Greenland by the United States. Representative Andy Ogles, a Tennessee Republican, is the main sponsor of the two-page Make Greenland Great Again Act. A Panama Canal reacquisition bill has also been introduced. It's got 16 sponsors so far. You spent some time at the Panama Canal a few years ago.
I did. It was like pretty wild. Kind of blew my mind. Just going back to Greenland, though. So right now they're beholden, right, to Denmark. So you do wonder whether this is a negotiating ploy. Like, hey, listen, we're thinking about like maybe you need to loosen up the ties on us. You know what I mean? Like, I just wonder kind of what's all going on here. I don't know.
The renewed focus on Greenland has given the territory more leverage in its relationship with Denmark, as Carol mentioned. She putting the world's largest island in an unexpected position of power. The Prime Minister will hold a meeting with the Self-Rules Party leader on Tuesday to discuss the situation. That's according to local media, Sermetsiak.
I don't know. You know, interesting times. The other
most read on the Bloomberg terminal, Carol.
Yeah, the only other thing, some people have said, you know, one of the things we need to be smart as U.S. citizens, as members of the media, is that there's going to be a lot of things coming from the White House, and I guess it's our, you know, job and responsibility to really figure out which things are like put out there to kind of distract or be a shiny new thing versus the actual policies, like you mentioned, about tariffs and so on and so forth, that ultimately come down and that do have an impact from the get-go.
We'll have plenty of practice starting next week, actually starting this week with confirmation hearings are set to kick off.
Yeah, that's going to keep us busy. I mean, it's going to be a packed full week, chock full of many things, including some important inflation reads. Another story among the most read on the Bloomberg, this is the second most read on the Bloomberg at this hour, and this has to do with an update on the cost of the LA wildfires. Those LA wildfires could result in losses of as much as $30 billion for the insurance industry as the blazes rage on almost a week after they ignited. This new estimate coming from Wells Fargo, their analyst there significantly exceeds last week's highest prediction from JP Morgan Chase that the fires stood to cost insurers roughly $20 billion. Our own Matt Palazzola weighing in too, and he has upped, you know, some of their estimates from last week.
They're now exceeding $10 billion, about $10 to $20 billion. Home insurance providers will bear the brunt of the cost. Allstate, Chubb, American International Group. Travelers are the most exposed among firms covered by Wells Fargo analysts. This is according to the note that the bank sent to clients yesterday, Carol. Remember, this is just one estimate, and this is the estimate for insurance. There's a different economic cost. So total damage and economic losses, it accounts for uninsured destruction and indirect economic impact. Lost wages, supply chain disruptions, healthcare, as Matt pointed out to us earlier.
Yeah.
Those are now expected to land somewhere between $250 billion to $275 billion. That's according to a preliminary estimate from AccuWeather.
And just remember, folks, the fires aren't out yet, so these numbers are going to be changing. Maybe on a little bit lighter fare.
Okay, what do you have for us?
Lighter. I think Charlie Pellet talked about this from the Wall Street Journal. If you're walking into a Starbucks cafe, you now need to be prepared to buy something.
Why
you
else
can't
would you go
just
in
come
there?
in and use the bathroom.
Oh,
like,
that's why.
I'm guilty. I've done that.
Who hasn't? Starbucks rolling out a new code of conduct at its cafes across North America. This, according to the Wall Street Journal's Heather Haddon, writing that it's aiming to improve guests and staff safety and experience. They've had this 7-year policy of allowing the general public to linger or use the bathroom regardless of whether they buy a latte or a croissant.
Yeah, exactly.
Don't they have like really cheap little things right at the front of the register, like a little chocolate,
buy a cookie or
piece?
something?
Well, no, like a piece of chocolate.
Oh, yeah,
You know,
I
like
guess
an
you could do that.
individually wrapped piece of chocolate.
I think it's fair, but when you're in a city like New York